How are you? Hi, Facebook.
Happy Sunday.
This is Yvette Harris, and you're with Yvette Harris in the neighborhood with the tax lady, Miss Carla. She's out of Perry, Georgia. But before we get into the conversation, we'd just like to let you know a little of some of the events that's going on in the neighborhood and that went on in the neighborhood last week. Well, you know, last week, some of you, I got on Facebook and I told you guys we had the election for the NAACP, and that was last Friday, the 5th of January. And excuse me for every time I get on the air, my nose starts to itch, and it doesn't start to itch until that's a fun fact to know about me. It starts to itch, and if you see me doing this, you say her nose is itchy. So that's why I do that. But we had two young ladies running. I don't know who won, but I wish both of them well. Miss Louise McBride and Reverend Dr. Rutha Jackson were the two people that was running. I wish both of them well. Hey, one of you guys call me and let me know who won. Also in the neighborhood, we have a parade tomorrow in celebration of Dr. Martin Luther King. We will be convening at the old Sewer Circle Park, which is called the Dolores Tolliver Park right now, and it's at 116 Wallace Drive in Warner Robins, Georgia. The lineup is at 9:30. We're lining up and doing a motorcade down to the big city of Perry, Georgia, y'all. Come on, Perry. Come on, Perry.
What time tomorrow?
We're starting up at 9:30, and we're going to convoy down to Perry, Georgia, and that's the beginning location at Sewer Circle Park / Tolliver, Dolores Tolliver Park, and we're going to end up at the church in the park at 1305 Main Street in Perry, Georgia. Also, you can participate in Decorate Your Car. Whoever has the best decorated car can participate in a cash prize, so you can get some money, guys. So that's one thing. And the name of the program is called the Conscious of Human Spirit. The Conscious of Human Spirit. That's what they named the celebration this year. And I hope a lot of people have a conscience. Sometimes we just look at things going on. I don't think they have a conscience.
2021, we need a conscience of exactly what's going on. Please come out tomorrow
and support
for Martin Luther King Day.
Mm-hmm. So we're going to convene there, and also tomorrow, in the spirit of everything, the young people are going to be doing a lot of the presenting. So come out and help us support our young people, because they are our future. And they are our future leaders. We will have a lot of them there, and you will be amazed at what they're doing in the neighborhood. So in the neighborhood, we have coming up, and that's all over the world, tax season. I know you don't want to talk about taxes.
That's why I'm here.
This is Carla, and she's better known as the tax lady. She has over 20 or 25 years with the IRS?
With the IRS, it was 20 years, yeah.
20 years with the IRS, the Internal Revenue Service, y'all. But she is a native of Perry, Georgia. Carla, what's your last name? Is it Hammock?
It's Hammock.
Hammock.
Shout out to all the Hammocks out there. There's a bunch of us in Georgia. Love you guys. And Florida.
Okay, and she's a mom. And she's also a bonus mom, because she inherited some more children that she's raising and mentoring. And my hat is off to her for doing that.
Sin, Coke, wine.
Okay.
Coca-Cola.
Okay. She has a degree in public administration. She has her own tax business in Perry, Georgia. And the name of her tax business is the
Magnolia Tax Service.
Okay, Magnolia Tax Service. And you can refer to her as the tax lady, but when you're Googling it, Google Magnolia Tax Service, okay?
Hi, Tracy.
So, we're getting ready to have this conversation and pour this tea in the neighborhood about these taxes.
Drinking water, not
I know
tea.
that's right. So how did you get started in the tax business?
So,
Carla?
not to hold you long, how I actually got started is just learning how to do my own taxes. My aunt Mary, rest in peace, love you, was a tax expert pretty much, and she told me when I got my first job at 15, if you can add 1 plus 1, is that 2? Then you can do your own taxes. So because if you look at a tax form, even now, and we're older, seasoned, but when I was 15, 16, it's still the same. It's a line of debits, it's a line of credits. And when you're doing taxes, you're doing pretty much an accounting journal. You're coming up with all of your debits and all of your credits, and you're coming to a conclusion whether or not you owe or whether or not you're going to get a refund. Hopefully y'all will be getting a refund.
So most of us can add and subtract, so you can kind of go along with that. So let me ask you this. Since we're in a pandemic and they've changed a lot of the tax dates, when is the earliest a person can file their income tax?
Well, right now, you can go ahead and do all your prep work. If you're doing e-filing, you can go ahead and prepare your return. Now, when the IRS will begin accepting returns, they announced on Friday, is going to be February 12th. This is going to be way into February, whereas most years is sometime in January. But if we got that second stimulus payment the end of December, that changed some things with the IRS systems, and they need additional time to get ready for your 2020 tax returns. So February 12th is the first day they're going to start processing the returns, receiving the individual returns. But prior to that, right now, today, get all your paperwork together because it's a lot. Hey, Cousin Deborah, love you.
Hey, Cousin Valerie in New York. Hey, girl, hey. Okay, so what is the minimum income level required to file taxes?
Well, the minimum usually is whatever you made, and it just is some other criteria. So let's just say, for example, you are a young person and you made $10,000 working at your local restaurant. Well, do you need to file a return? Well, it depends. Did they take out taxes? Do you know what FICA, Medicare, all that is, federal taxes, state taxes? It's a good chance that they did. And if they took out any taxes, the federal part, the federal tax withheld, the state tax withheld, you more than likely will get that back as a refund. So you do want to file.
Okay, that's great. So guys, regardless of whatever they took out, you should file, no matter how minute.
Well, it does matter because if you work for an employer like McDonald's or Purdue, then yeah, you probably will have a filing requirement. If you work for yourself, the IRS will have it like a threshold that you make $600 or more doing home repairs for someone or something like that. Then yeah, you will have a filing requirement. But if you're a retiree and you're just getting Social Security, then more than likely, if there's your only income source, yeah, you can file a return, especially if there's a stimulus involved. But do you have to? We're learning now through the first, second, and possibly the third stimulus that there are some adults that actually need to file a return in order to qualify for the stimulus payments.
Yeah. So, and I heard on the TV that if you did not receive a stimulus check, you can put that on there, and that's how they'll correct everything for you.
Yeah, so it's something called the rebate recovery credit that is new to the 2020 tax return. If in fact back in the spring, summer, you didn't get that first stimulus payment because you were an adult dependent on someone else's return and you're trying to get that now, the 2020 tax return is when you would file and claim that recovery. It's a rebate recovery credit. So the first stimulus, the second one, and whatever's going to happen in the future will probably push a whole bunch of people into the status of needing to file a tax return. You need your correct address. You need your direct deposit information if you want to get that and file a return to get your stimulus payment.
I know it's so much in filing these taxes, but you know what, we got to get this right, because running a household is just like running a business. So we have to get, we got to get this straight. It's just, we're just not living out here. We have to get this straight and keep everything tight and right. Okay, so what are some of the rules for claiming dependents?
So the dependents, usually if you ask that question on Google or go on the IRS page, there are tests that they have. Did the dependent live with you for the majority of the year? Did you provide at least half of their support? What does that mean? Did you provide food, shelter, other expenses to help that dependent? Then you more than likely will be able to qualify for putting that dependent on your tax return. And it's an age thing too.
Oh, it's an age thing. Okay. So if, say, for an instance, I had this to happen to me, my girlfriend the other day. She had been taking care of her daughter for, I say, 9 or 10 months, and her daughter decided to go and live with her ex-husband. Mm-hmm. Well, the ex-husband, they're not on amicable playing fields, and the relationship is strained.
Okay.
Strained. But anyway, he decided to jump the gun and try to file the daughter first. And now that's kind of put her in a strange position. So how can you speak to that? What happens when that, the parent who has custody of the child has taken care of the child for the whole year, and then the father decides to...
So some issues has to be addressed through the IRS. Mm-hmm. And we call this a custodial parent who the child actually lived with versus the non-custodial parent. If there is some type of separation agreement, divorce decree agreement about every other year or sharing that actual claimant of the child, mm-hmm. that's fine. But when there's no agreement, then again, you go through those tests and you can see if you're the custodial parent, the majority of the year that child lived with you and you provided their support, then more than likely you'll be able to claim them. So, but what happens when someone jumps the gun and they go ahead and file that child, like the non-custodial parent, mm-hmm. and you go to e-file and you get a reject? The IRS will tell you over and over again, don't fret, mail in that tax return. They will ask you for documentation to prove who provided the support of the child and make that determination. If you're not amicable and you can't come up with that agreement, then, I'm not sure what you can do. However, there is something that your preparer can do. There is something called a release of exemption, and the non-custodial parent can have that release available on hand and actually provide that to the preparer and say, the custodial parent released this exemption to me, even though the child lives with them, mm-hmm. with the other parent, I provide support too. That's fine. You have that form. You'll be able to e-file or mail in that return, won't have any issues. But if that non-custodial parent don't have that release of exemption and there is a dispute, the IRS will make that determination.
Oh, okay. Hey, y'all got that?
Sorry.
Okay.
I'm not used to doing this, so excuse me.
Everything's okay. This is fine. Okay, so do you need a W-2 form to claim an earned income credit? Do you need a W-2 form?
So earned income is just that. So if you're trying to qualify for the credit, you have to have earned income. Do you have to have it on wages only? So no, but you have to have worked. So if you're self-employed like myself, I work. I have earned income. But how do I prove it? Well, you have to file a self-employment tax return to prove that you have earned income. If you work for an employer, you work for someone down the street, whatever, you're going to get a W-2. But if not, then your earned income that's on that self-employment return, or if you receive a 1099 non-employee compensation for like a contract work that you do, mm-hmm. that again is earned income. If you are retired and you're receiving retirement income, that is not considered to be earned income, and you will not qualify for the earned income credit. The same thing if, like, you have rental property, that's not considered to be earned worked income, so that you will not qualify for any of the earned income credit if you're within those income brackets.
So what you're saying is, okay, if I got 2 kids and I didn't earn any income, well, what about
if you got 2 kids, you probably need 2, 3, 4 jobs. So
I know.
So
how do I get the earned income credit for my child then?
Let me tell you something. Everybody need a home-based business. Everybody needs some type of way to bring in more than one stream of income. Mm-hmm. And if you are at home, you are maybe watching the neighbor's kid. Okay, come on now. If that's the case, maybe you do have earned income. Maybe if you are doing other kids' hair and making money from it, that is earned income. You just need to learn the rules and make sure you're giving yourself credit. Get your records together. Make sure that you form a business. You have earned income.
Okay, so that was good. Is the short form really a short form, and can a layperson fill out a short form?
You know what? The way that things work now, anybody can go on IRS.gov and do the free file if you're within that income limit, and go through a tax return yourself. Now, if you have one job, a W-2, one child, or just you, it's pretty easy just to do it yourself and follow the steps of but you got to enter all of that information correctly and make sure you got all of your income. And that's not an issue. But if you need help, there are paper preparers out there that you can just hand them your paperwork and they'll do it.
So is there a standard cost for like just a short form? And what about price gouging?
So I don't think I really answered your first question.
Okay.
So your first question is, no, there's no longer just a short form. When I was growing up and doing my own taxes, there was a 1040 EZ that was green and white, and then there was a 1040A that was pink and white, and then a 1040, the actual long form. Now it's just one long form. The only difference is if you're at a certain age, you're over 65, there is a 1040 senior return. And just a regular 1040. No more short forms anymore.
What?
No.
I'm in the short form category. No. Okay. What about price gouging? You got 2 or 3 kids and you file. You're gonna be a thousandaire. You know what I'm talking about. You ladies and you guys out there, you gentlemen. You're gonna be going around being that thousandaire status for 2 weeks.
So you don't want to prepare all your money. So listen, again, if you're computer savvy, a lot of you can do your own taxes. But if you got a lot going on, if you are self-employed, or if you own property or you got something else going on, then you might want to go to a paper preparer. The only thing that I would tell you is do your due diligence. Just make sure that the person that is doing your return is not charging you a price because you have 4 kids and 1 W-2. Mm-hmm. You can have 2 kids, or like me, just 1 and 1 W-2, and my price should be the same. Now, if I wear a lot of hats, so I have more than one business, and I've had rental property in the past, so I'm going to pay more. So, but you ask up front, what is going to be my charge? This is what I have. I have 1 W-2 and 2 kids. And this is how much I made. Can you kind of give me an idea? So, yeah, they may say $150. But if you go down the street and say the same thing, I got 1 W-2 and 2 kids, and I made less than $50,000, and they say $350, then you're going to want to ask questions, is that the best price that you can give me? Why is it, a little pricey? And find out.
Yeah, ask questions, guys. Just don't jump at the first person because they say, okay, I can get it back in 2 days, or you can take out a loan. Wait your turn. Don't be so thirsty. The money is coming. Just wait and get it back and keep most of the money that you can in your pocket, okay? So that's the best advice I can give you for that.
Definitely save it for when you need it.
Because you're going to need it.
Always.
So how long should you keep a tax document? like your tax forms?
Good question. So in general, the IRS will say that to keep your tax returns and all documentation for that year for at least 3 years.
Mm-hmm.
So we're in 2021 now. Last year we filed your 2019 return. So you would keep your 2020 return, 2019, 2018, and I would tell you to keep 2017 to the end of this year, right? Mm-hmm. 17, 18, unless you had some issues with any of those years, then if all of your issues, you're not getting letters from the IRS and you don't have to go back, I would keep them. Anything on buying property, home ownership, I would keep at least 10, just as a general record keeping type of thing.
Oh, okay. So that's some good information, guys, and keep it in a safe place.
Absolutely.
What is a standard deduction for, like, what is a standard deduction?
So the standard is what the majority, like 9 out of 10 returns, you'll see now. Since the 2018 tax changes, the standard deduction changes every year based on inflation. It'll be adjusted a few $100s. So like last year, if you were a single filer, the standard was just from the bottom line of your income off the top, a deduction of $12,000. If you're head of household, the deduction is like $18,650 this year. If you're married, it's $24,000. This year it'll be $24,800. So every year is a fluctuation, but it's just a deduction that you can take based on whatever the standard that the government is saying. We can reduce your income that you're going to pay taxes on by this amount. That's your standard deduction.
Oh, okay. That's great. That's great. And you need to take those deductions if possible, guys, because that means that you can keep more of your money.
Keep more money.
Okay. What is the difference between a tax credit and a tax deduction?
So a tax credit, we'll just piggyback on what we just said. So the standard deduction is just a deduction across the top. Okay, now tax credits, not everybody qualify for all of the credits out there. So I'm going to give you an example. The child tax credit is for people who have children under the age of 17. And they have income limits. If you make too much, you may not qualify for the entire amount. But let's just say we'll stick with $50,000 and under. You can possibly get a credit, and on the back of your return, the difference is if your taxes is $5,000 for your income, that child tax credit can cut that down. That child tax credit, if you qualify, could be $2,000. So instead of you owing in taxes $5,000, you owe $3,000, and then you had taxes taken out, anticipating that you're going to owe taxes. So then on top of that, you'll have your federal taxes withheld amount, the amount on your W-2, and to determine, I paid in this amount throughout the year. So how much do I really owe, or can I get some of my money back?
Okay, listen. You're going kind of fast on that, so let me just break it down. Okay. If I had 2 kids and I had a tax credit of $200, just keep it simple.
Okay.
And then I had a tax deduction because what's the tax deduction now?
So let's say it's the standard deduction or itemized.
Standard deduction, because the government gives you a standard deduction that they're gonna let you take off of your total,
your gross.
Okay, so now I'm getting it. Okay, so then the tax credit can also eat into
well, your tax credit is going to eat into the actual bottom line tax that you owe.
Okay, the bottom line taxes that you owe, because they give you so much for the tax credit, because the tax credit is the children, right?
The tax credit can be the children. The tax credit can be retirement savings for the year. The tax credit can be education. Okay. I was in college, and you're going to get a little tax break if you qualify. So the bottom line is, go ahead.
Okay, no, go on.
I don't want to interrupt you.
Oh, no, I was just going along trying to say, okay, that's good, because I had another question coming up with that.
Okay.
I know you said 17, but what about the kids, the people who have children and they're carrying them and they're still in school up until 25? Ooh, that's too old. But anyway.
No, because you could have an adult dependent, no matter their
Yeah,
age. It's a matter of test. Did you provide the majority of the support? Did they live with you?
Can they be taken off your taxes too? Because does it matter about their age?
It does.
Or what? It does?
Because the rules are different,
Okay.
depending on what you qualify for, which sometimes makes doing your taxes yourself a little tricky because you got to see, let's say 17 years old, last year I got this child tax credit from a 16-year-old for $2,000, and I want that refund, the additional $2,000. This year they're 17. Why I don't qualify for this credit no more? Well, you don't qualify because of the rule, and the rule is that's the cutoff. But maybe they are in college, or maybe they're still in high school but taking college classes, and they qualify for the education credit. So there's another credit that they may qualify for.
Education credit. Okay. That's why you need a tax preparer.
That's why you need to know what you're doing, or you need to come see me.
Do your due diligence. Okay. When is the last day to file your taxes? I know everything kind of changed this year.
So 2020, everything changed, of course. The date, the deadline is April 15th. They pushed that back to July last year. Mm-hmm. So they have not made an announcement as of today about pushing that due date back because so many things would have to change. However, I always say, get your paperwork together now. December, you can start getting all of your bank statements together and just having some notes of everything that you need to get. All of your income. Did you move retirement money? Okay, you're going to get a statement. I need to pull up a statement. Did you sell stock, cryptocurrency? Get all that together. And then you got to get your W-2s. You got to get interest, dividends. Just get your records together. Put them in a folder or a pile. And when you get ready to do your taxes or, give that to your preparer, just have everything together. Don't wait till the last minute. Do it now.
Like me.
Don't
Number
do
one
it.
Procrastinator. Okay. What should you do when you owe? Ooh, that's a bad word.
So
owe taxes back.
We all owe taxes. Taxes come out of when you pump your gas. So it's just a part of our life here. So the main thing is to not panic. If you think you're going to owe, don't not file. Go ahead and get your paperwork together, file and face the music. The IRS and the state of Georgia, or whatever state you live in, they have something called payment plans. If you own a credit card or pay your power bill, you know that you can actually go on a payment plan. Mm-hmm. And the IRS in any state will offer the same courtesy. We don't have money 24/7 to pay every bill that comes in our laps. So just like anyone else, just call the IRS, write them a letter, or they have forms, state does too, called an installment agreement. Just make an agreement to pay back in increments. But if you file late, just know that you're going to have a penalty. Pay late, you're going to have a penalty. But what you're going to have, just like with anywhere else, you're going to always have interest, and you just have to pay it.
Okay, so don't get upset and don't run from it because it's inevitable. It's two things that we're going to do while we're on this earth, and that is we're going to die and we're going to pay Uncle Sam his taxes.
That sounds like something from Benjamin Franklin. Going back.
That's my mama and my daddy. But they said a little bit different. That you black and you're going to pay taxes. You're going to stay back. Okay. And you're going to stay there and you're going to pay taxes. Two things you're going to do. Well, three things.
But this anyway. Melanin be popping, so we don't mind.
Hello. Melanated. Okay. So, in your personal opinion about the tax laws, do you think that they benefit a self-employment or people that work a traditional job, especially if you're owing back taxes?
So always remember that being in business for yourself, even if you work for an employer, you work for someone, is a whole list, like 400 and something tax deductions is out there if you have a home-based business. You don't never want to not have your own side hustle, you want to always have a way to not only generate more income for your household, but then you can steer deductions your way. You know, if you have kids under the age of 18 in your household and you have a home-based business, you give them a job, you pay them, you can get up to a $12,000 deduction for that child working in your business.
Mm-hmm.
Don't leave money on the table. Yeah, file your return, pay your fair share, but make sure you understand that there are rules out there that can help you lower your taxes and bring more money home.
Okay. Yeah, guys, we got to stop leaving that money on the table. And the way to do it is to read or get a professional to help you prepare your taxes. Okay, let me see. What tax forms should you file when you're an entrepreneur?
When you're an entrepreneur, you're going to file a Schedule C. That's a part of your regular 1040.
Mm-hmm.
That is your business tax return for the majority. Yeah, the Schedule C is a business tax return for someone who is self-employed. The Schedule C will let you report the income that you made for that business, and it is a boatload of deductions for that business that you may qualify for. Do not leave money on the table. Learn about the Schedule C. Learn about home-based business and all of the deductions that you may qualify for. Take advantage of that.
Okay, so remember, guys, and take some notes while we're doing this, because this is very important. We're talking about the way we run our lives.
Absolutely.
We're talking about the money that we said we don't have enough of, and we just leave it on the table for Uncle Sam to get every year, and we could bring some of that money back home. Okay.
Absolutely.
What is the most common item that a client forget